Hi, I'm Farah Nabilah and this is Bizworld. The Asian Plus3 Macroeconomic Research Office, Amro, has maintained its 2024 growth forecast of 4.5% for the ASEAN Plus3 region as improving external sector lends further support to resilient domestic demand. Chief Economist Ho Ee-Kor said strong domestic demand amid moderating inflation and continuing improvement in trade will propel growth despite uncertainties in global outlook. This as exports pick up towards the end of last year, while retail sales volume and headline inflation moderated further in the fourth quarter of 2023. He added that stable industrial and service activities in the Chinese economy are also helping to provide additional momentum to the region this year, alongside gradual improvement in exports to other key markets. The automotive sector is expected to experience a similar 2023 trend, given an equally strong lineup of launches this year. According to Kenanga research, the industry's earning visibility remains strong, backed by a 200,000 unit booking backlog as at end December last year. It said more than half of the backlog comprised of new models, underscoring the appeal of new models to buyers. The research firm also projected a total industry volume TIV of 710,000 units this year, slightly lower than the 740,000 units projected by the Malaysia Automotive Association. Meanwhile, RHB research forecast the TIV to be at 625,000 units, in line with the 10-year average. This was based on a lack of compelling factors for 2024 auto sales of book another high. Malaysia Airports Holdings Berhad MAHB has denied that the Aerotrain replacement project will cost 30% more, maintaining that the project cost increase will be capped at 15%. The denial comes after RHB research in its report today suggested that the combined job value of 176 million ringgit and 456 million ringgit awarded to the IJM Corp Berhad Prestec joint venture and Alstom Transport Systems could be 30% higher than the remainder work that was terminated. This assumes that the contract for Alstom is distinct from the IJM Prestec joint venture. According to the investment bank, the increase is in comparison to the outstanding job value of the Aerotrain project at the time of Prestec's contract termination. A MAHB spokesperson, however, refuted the report, calling it inaccurate. It said it will be notifying RHB research about the error. Shares in Bursa Malaysia ended lower today due to negative Q from global equities. At 5 p.m, the FBM KLCI dipped 12.03 points to close at 1,479.18. On the broader market, losers led gainers by 815 to 218 counters. According to Rakuten Trade, positive outlook on Malaysian equities remains intact despite the sell-off. This is supported by the improving corporate earnings and advantageous economic conditions within the local economy. The Organization of Petroleum Exporting Countries, Opac, forecasts that global oil demand will continue to increase strongly next year and exceed growth in supplies. It said world consumption will swell by a robust 1.8 million barrels a day next year, driven by China and a recovering global economy. OPEC also see rival supplies expanding by 1.3 million barrels a day next year. As a result, oil markets are set to remain in deficit through to the end of 2025, unless Saudi Arabia and its allies boost output significantly. The forecast comes on the same day that the alliance's top official published a rebuttal to predictions that oil demand is heading toward a peak. And that's all the time we have for Bizworld. I'm Farah Nabilah. Keep tuning in to TV3.